So let's dive straight in, shall we? We'll start with the US, and all eyes are on the Federal Reserve. Now they're going to announce their interest rate decision on the 29th of October at 9 p.m. GMT plus 3. It's quite well documented that the market is pretty much pricing in a 99% probability of a 25 basis point cut. Now that would bring the rate down to 3.75 to 4%. Now although the cut is pretty much priced in, it may weaken the US dollar in the short term. Now, with such a probability, I think it's fair to say that eyes are going to turn towards the report and what Fed Chair Jerome Powell has to say in his press conference at 9:30 p.m. Whilst another rate cut is anticipated for December, Powell may introduce some uncertainty regarding the pace of future easing. Now, if the Fed does signal a little bit of hesitation about further cuts, the US dollar could find some short-term support. Now, last time the Fed cut rates was back in September, and again it was priced in, but the US dollar did weaken slightly. However, since then, and this is why these press conferences are important, Powell stated that given the pressure from the labour market and prices, the Fed could not manage the situation as a whole. He said, "Our tools cannot do two things at once." So uncertainty over future cuts may well support the US dollar as they did last time. Now later in the week, attention is going to shift to the PCE price index, and that's on the 31st of October, 3:30 p.m. GMT plus 3. Now this is the Fed's preferred inflation gauge, but it's unlikely to sway policy direction significantly given this current shift towards monetary easing. Still, saying that, better than expected actual data may support the US dollar, whilst a weaker report may put some more pressure on the US dollar.